In this video, I'm going to walk you through a step-by-step setup that I've got my eye on the New Zealand dollar. I'm looking to short this pair. I'm going to walk you through the whole thought process and then different ways that you could enter based on your levels of conservative to aggression as a trader. So let's get stuck in. So this is the daily time frame, and you can see that we have just recently broken close below this previous low at 58.01 or 5800, and you can see that as the market broke and closed below that, we put in that nice strong break and close below, and we're starting to push back up to previous support, which should become resistance. That's what history teaches us about the markets. Patterns repeat themselves. Look, success leaves clues. Look left, market leaves clues, structure leaves clues. You hear all these things, but if you just project this out a little bit further, in fact, let's put our horizontal line at this level as well. What you can see is this level is respected time and time again, and the more you zoom out, you can see significance of this level. So you can see this massive rejection here, big rejection here. We blasted through, we tested here, it became support, we had a rejection there, and then we blasted through. Whenever you see breaks and close above or below these major structure levels, they're always following big momentum candles, because it's to ensure that we break and close below those significant levels in the market. But what the clue is it tells us that these are respected levels. So if we break and close below, the chances are if we push back up to that level, there's going to be some protection there, right? The bears aren't going to want the bulls to push beyond that level again. So what we can do is we can start narrowing down our entry zone. So I'm going to drop down to the 4 hour now, and you can see that we've had this, what we call a complex pullback. So we had the low, right? And then we had this kind of, let me just draw this on properly. We had this outside, like the outside return. Then we had a little, a mini outside return within the pullback back. And if we clone this move here, you get what is known as an equal measured move, an ABCD pattern. You can even find them on here, right, where you can draw them on using Trading View A, B, C, D, okay, and you can use that tool there. But basically, it's an equal measured move, and that is one way that traders get involved. That is a strategy in itself. So our job as a trader, as a high probability trader, is to think like as many other traders as possible, right? So what I like to do is to think like as many traders as possible by bringing on as much confluence as I can that's going to give me the best case for entry. Now, there's pattern traders, right? So let's just say that we've got pattern traders looking at this area, and we can draw this on X, A, B, C, D. That 886 completion is sitting just up here at 58.28, which would be a bat formation completion. So anyone who's trading bat patterns just sets a set and forget order there, you know, basically a limit order, a sell limit order, and they're ready to get in and sell this short there, right? Now, what else can we do? Because as we're doing this, what we're doing is we're narrowing down. If we bring on our rectangle here, we're kind of narrowing down this tight little kill zone for the highest probability of a reaction to the downside, as a move to the downside. Another popular strategy for shorting the market in a directional move like this is what we call a fib inversion setup, or a Fibonacci inversion setup, where we're going from the mini outside return to the previous high and back down, and you're looking at that 1618, right? So you can see we're at that 1618 now. We're in that zone right now. So what we're trying to do is think like as many traders as possible. Okay, you can bring on other fib confluence. You can go from here to here, and you can see that we've got that 786 lining up perfectly in there as well, right? You got the 886, which is obviously the completion of the bat formation. But then you could start looking at RSI. You could go down to the 60 and look at overbought conditions. You could look at a double top at the entry point, right, at the decompletion point. Or you could just, you know, wait for a doji candle to complete. So depending on your level of aggression into this trade will determine how aggressive you are with position sizing, stop loss, target taking. So if you're taking the pattern, conventional targets would be at the 382. But because we are in this directional move, instead of taking the 382, which is here, you could either take off some of your profits at the 382 and then trail the rest down, or you could take off some of your position at the low and then keep trailing it onwards for the extension. But you get where I'm going, right? So for me personally, I don't trade fib inversion on this particular setup, but I do trade bat formations. So I can just come in here and I can set my my order here. I can just place an order on this account. I can set it up a couple of pips below the low of the conventional entry at 58.27. So I'm going to get that in now, and then I'll show you what that looks like. All right, so I've got my orders on here. I've got a limit order. Okay, so this is my limit order, which is going to be placed up at 58.27, which is just allowing a few pips for front running for the spread. That doesn't mean I'm in the trade yet. If market pushes up and triggers me in, that's where I'll be getting triggered into at 58.27. My stop loss is a 113 fib inversion above X to A and back down. And then my target, what you'll see the difference that I make here is instead of conventional 382 targets, which go here, I take my entire position off at the 618, which just above this previous outside return here as well. So based around structure, this is where my target is. In total, in terms of reward to risk profile, this is going to be a 2-to-1, which is nice, very nice, which means I'm risking £2,578 to gain 5,215. So that's the trade on the table. Leave me a comment to let me know what you're looking at. If you want to see more breakdowns like this, let me know. And don't forget to go and watch my bat pattern tutorial on how to trade these bat patterns, because that's been phenomenally popular, and you can get the downloads of the rules of engagement and everything. So go and watch that now if you haven't seen that already, and I'll see you in the next one.